Good morning, guys. Welcome to this Wednesday, April 15th, tax day. It is tax day. And it's going to be, I don't know, it doesn't impact anything. It's just a fun thing to point out. But tax day is upon us. Hope you did your taxes. Right now, after a few days of spectacular gains, we are right back up again. We are right back up at the highs again. So the market is clearly looking past this conflict now. Fear of missing out, or whatever you want to call it, is just taking a big move, uh, creating a big momentum to the upside. And look at that, the rocket ship. We were down here at these lower end of these lower distributions and ready to pounce to the downside. And then the ceasefire kicked in, or they agreed to the ceasefire. And that was the first pop. The second pop came this week after the talks fell apart. SS tells you that, and then that reverse blockade, or the blockade of the Hormuz. That's blocking Iranian oil. That's a play they didn't expect, I guess. But anyway, market's looking past the whole thing, and we are right back up again. Earnings season is here. The earnings, I think it's Morgan Stanley reported better than expected earnings as well. I think it was Morgan Stanley this morning. I heard a number came out. And so there's plenty of news going on here. Earnings season is just ramping up here. So we're going to get more earnings come out, and as we do, if the earnings keeps being good, the market is going to respond to that. That's how it's going to be. So the news this morning in mortgage apps was kind of a mixed bag. We're going to see at 8:30 Empire State manufacturing, import-export prices. We have a housing market number came out at 10. That's about it. So not a whole lot of news which are driving, if you wish. And all reports coming out at 10:30 as well. And remember, the oil we have in the U.S., this part, the U.S. has enough oil here to not be dependent, but other countries are definitely depending on that oil from coming out of the Hormuz Strait. And, that it's going to be, it is sense that it's going to be over pretty quick here. Once now they cut off the whole revenue stream to the Iranians, it's going to be a pretty hard, tough thing for them to hold out, and all the money goes away. So we're starting off on the long side, guys. We had looking at this, all the stuff we've got going on, starting from the long side of the market, looking to buy weakness. At least to get started, watching these levels, I'm going to pay attention to this level here, 69.20. That's going to be the level. If they start trading below that bond, I think something is going on again. That would be a bad sign. But this whole move we had up coming from yesterday, it starts at 69.20, 30, 40. These lower support areas in yesterday's overnight. And that was right here at that support area. And there was resistance at the time, not support. So if they start trading below that area, that's when I'm going to start thinking about potentially changing capital flow again. Right now, I think capital flow is to the upside. The capital days like this, when they rockets like this without any selling whatsoever, you got to take this as seriously. And the market is the low is in. We are heading higher. Now they're going to be able to bust through the highs here right now, but anyone's guess. But I'm thinking that the repricing the entire oil structure or the energy structure without a malicious player like the Iranians, that would be a pretty good. That would be a positive thing. Maybe be able to price the energy lower. It's going to be a good tailwind for economies and everything else out there. So looking to buy weakness against the 69, 60. It's 7,000 is what I say. I was going to 69.99. It's like, yeah, no, that's 7,000. I'm going to buy against 7,000, the 69.90s, 69.80s. These three support areas initially. If they start trading below the 80s, I'm going to take off the long bias here, go back more range bound, looking for more of a retracement trade down here. And if they for some reason start taking out these lows at 69.40, 30, 20 on the downside, bets are off. But that gets that far down, this day we retrace the whole yesterday's day session. That would be a pretty good move to the downside. That would mean that something happened or something is something not so good happened. So pretty straightforward. And this momentum, I'm not sure if it's going to keep going today or not, but it's because we are running right into the highs, the all-time highs. But I would not be surprised if we get an attempt to take it higher. If they're going to succeed or not, anyone's guess. I would potentially look for a potential move to the downside or a potential failure trade. A little bit of caution on that one, but potentially look for a failure trade and see if they can, if they're going to fail to take it higher right from the get-go. If so, chances of it may be stalling here for a bit and going sideways. So that would be my expectation when I run into the highs like this. But with the momentum and the outlook going forward, man, they could technically run straight through it. So we'll find out. But initially looking to buy against that 7,000, 69.90, 69.80s for rotations up. Below the 80s, 69.80s that is. Taking off the long bias, going more range bound, looking for a retracement trade. If they for some reason try taking out the 40s, 30s, and 20s, these three support areas, bets are off. We are heading lower. If those three levels come out, then something happened. They're pretty straightforward, dynamic, I think. I think the big question is going to be if they're going to have enough momentum to keep going or not, or if they're going to run out of gas here at the highs. But I'm not going to be, given what's going on, I'm not going to be super aggressive on the short side. So if they start running up here, testing the highs, I'm not going to just step in front of it. I'm going to wait for a pretty good base to form. Something like that, something when it runs up and the stall and the bank go back and forth and churn a bit. That's the kind of dynamic you're looking for. Okay, they're not being able to take it higher. Now you can potentially short a channel trade and see if they want to take it further, or you can buy the lower end of that potential channel and see if they want to try to bust through the highs. I would favor the short side at that point, but I would not be aggressive. I would wait for that resistance area to form first. I can see that it's actually failing to take it higher. And if you see a channel which keeps going at the highs and it just doesn't want to fail, chances are we may see a bust to the upside at that point. NASDAQ, very similar dynamic going on there. NASDAQ is not quite made it all of it back yet, but look at that thing go. They made a pretty good progress here the last couple of days. They're up here against that 26,040s. They'll be left to go. But man, look at that thing. That was just on fire yesterday. So initially looking to buy against the 25,960s, the 920s down to the 870s. Starts retracing below the 870s. I'm going to look for a potential retracement trade. So that would be taking off the long bias and see if they want to retrace it further. And on the way down here, I'm going to watch this mode here. The 25,690 to 700s. It start trading below that one. Maybe we have a little bit more downward pressure, but not unless they start taking out that 450s here. I really leaving this big distribution of value. So you can see this the attractor is at 25,700. Higher end of this range is where we are right now, 26,000. Lower end of that range is 25,450. So below 450s, bets are off. Something is going on if that happens. But I mean, it's if they start backing off initially, at least for today's trading, below that midpoint to 25,690, I would stand alongside or from a capital flow perspective. But I mean, they start taking out that 690, 700. I would start thinking short side of the market, at least for today's session. Now, intraday, this is capital flow, but intraday, looking at the more diving into the day session, these first three support areas, the 960s, 920s down to the 860s, looking to buy against those support areas to get started. Below the 860s, taking off that long bias, going back more range bound, and looking for a retracement trade. Of course, they can run it right back in. So the starting point of that trading at 25,690. This is right here. You see it on the F2 here. That mode. That's where that's at. So if they retrace it all the way down to that mode, yeah, that would be a concerning sign. That would be reversing the whole day from yesterday. But that could happen, it just depends on this volatility, what's driving it. But I get a sense that there is a lot more behind it. So we may see a little bit of a pullback, the weakness to get long against. We watch these lower areas. So watching the 6980s, and we're watching the 25,870s, 860 to 70s. Those are the edges I'm watching for potential change in bias to get started. And on the way up, looking for shorts against the 26,000s, 26,050s on the NASDAQ. On the ES, I'm looking at the 7,010s, 7,020s. But all of that stuff with a lot of caution. Not going to be super aggressive on the short side. I did take a couple of, well, no, I didn't take a trade yesterday. I took a short trade on, what was that? It was a different account. I took a different short trade yesterday, but that was the very, very quick in and out kind of stuff. And it's really just looking at if you have a retest failure setting up at an upper level and you're looking for a short scalp, those trades are certainly valid. But if you're looking at the rotation back to the mean kind of a trade, I would not be very aggressive on those trades yet because they're not going to go very far. And chances are you get stuck pretty quick if they start grinding that higher. So if you get short, keep a tight stop, get out early. There's no point of sitting in a trade which keeps going against you. So, and if they keep going, they're not going to let you out. It's not going to be, as you saw yesterday. If you were short and tried to repair yesterday's trade, you would just be absolutely blow up your account because it was just not happening. So the day you do play a game like that, and you have a day like yesterday, that's when you lose your account in your house or something like that. You don't want to do that. I mean, always take the loss. Small, it sucks. It sucks. It sucks. Just take the fucking loss and then look for another trade. Sometimes what I do is I just take that extra step and I try to repair a trade once if I have a shitty entry, and if I still can't make it work, then I just let it stop me out. I used to engage it harder, add another level, and then make the trade bigger. And sometimes that pays off. You get the really good retracement, and yes, you smile, you're all smiles. But that day when it doesn't, that's the day when you get creamed, and that's yes, you just have to manage your risk better than that. So just know when you're wrong, and then get out of the trade when you're wrong. On the bond side of things, just kind of holding in a range. We are down at 14.16. The tractor is up at 15. So I'm thinking they're going to trade it up there. And that's why they're heading. Just not in a straight line. So right now we've been a steady selling going on. We actually slow drift to the downside. I would start looking to buy weakness against the 14.16s, 14.10s, maybe down to the 14.02s. But yeah, I would just give it a couple of levels. If it starts trading below more than that, I'm thinking that they maybe want to retrace a little bit further. I'm looking to buy against that 16 area, looking to buy against the 10 area. But I'm not going to get engaged pre-market. I'm looking for the day session to kick in a bit, see a little more activity, because that gives you better setup. You can see how the market it doesn't trade range-wise a lot, so you don't get a good sense of what is a retest failure in the overnight. So I'm just going to leave it at that. But unless they get a good retest failure setting on that one, I would not be engaging it. And right now, I'm looking for a long trade against these two. Let's see if they're going to try to push it lower. And I'm expecting them to run it up to 115.10. That's my expectation. If it doesn't happen, then if they can't get back up above that 14.28, I would not be super aggressive on that long side either. So if they start taking this higher, you have potential shorts against the 22, 24s, and the 28s. Rotations down. So trading it as a range bound market, assuming they're drifting back up towards the 115.10. But the market is going to do what it's going to do. So just because you have an assumption, don't just just be prepared to adjust if it's not working out or if it doesn't develop that way. Right? But it looks to me like the trend has been a slow drift back up here towards the 115s. And that's the bigger picture, as you can tell here. And I would just kind of look for that. Oh, the heck, it was that thing. Look at that guy. All right, that was a weird one. That didn't look right. Okay. I think that was a level which cream is going to be like something like that is what we want to have there. All right. So leaving that for now. So I mean, looking at that, but if they can't get past this area right now, the 28s, and get back up to around 15, we're going to stay in the range. So looking to buy against these first two levels, looking to sell against these next two levels on the upside, and that's about it on the bonds. And we'll see if we get some traction. But I think that most of the action is going to be in the indices today. So the volatility is not off the chart. And if the market is trending to the upside as it has been, then you have a pretty good shot at trying a long trade and having it work out. Just be mindful, both the ES and NASDAQ are running up to highs, all-time highs, and they will be running into some resistance when they get there. Crypto-wise, not much to say about it today. It's been going back for silver's back, then backing off pretty good, and backing off here in the day session. So that's your silver. Your oil is trading pretty much the same as the crude oil. I mean, that's pretty much mimicking that market, trading around 1992 bucks a barrel. That's pretty amazing, right? 1992 bucks a barrel, given all the stuff's going on. That's a good sign. I mean, you have all these people talking about $200 oil. I mean, it's always easy to throw that stuff out. $200 oil. Yeah, right. Okay, but we're not there. So 90 bucks a barrel, and it came down from 100 and something pretty quick. So if they keep this trajectory on that conflict, will be oil is going to keep coming down, and the Bitcoin and Ethereum futures are pretty much doing the same thing. Now, as you can see, the chart looks a little bit different than the other chart. Has to do with volume, has to do with not enough volume on these guys to use equity bars effectively. The only thing I added here is the Donchian channel on this chart, and I changed the color on the background a bit. So I'm just watching it, trying to dial in those charts. I mean, so they become as useful as possible. But anyway, so not much more to say about the cryptos right there. Back to the ES and NASDAQ and earnings season, Iranian war winding down. We got a lot of stuff in potential tailwinds, but the earnings season so far started off pretty good, and that's probably another factor why the market is rocketing like it is. So we'll start from the long side. Watch these lower areas, 69.80s, and the next level down on the Nasdaq 860 to 70s. If those comes out, take off the long bias and go back more range bound. Otherwise, I would stay on the long side of this and see how far they want to take it. Alrighty, guys, we'll leave it there. Tax day. If you did your taxes. Anyway, we'll see you guys back at 11:30 for the next update. Good trading. And let's see if we get that continuation to the upside. Man, it's been a few days of some crazy stuff going on. All right, guys, later.